This is the London Fintech podcast, bringing you practical insights and approaches, stories and inspiration from the innovators who are building the new world of financial services. This podcast is brought to you by NextWave, strategy specialists and solutions for financial institutions. Hi, I'm Tony Clark, and this is the London Fintech podcast. This show is about sharing inspirational stories from the world of fintech and innovation and the personalities behind them. Today, we're going to be talking about the future of wealth management, some of which is here already, as we will see. I'm delighted to be joined by Sarah Levy, CEO of Betterment. Betterment operates in the US, where it is the largest independent digital investment advisor. The firm currently has 50 billion assets under management and almost 1 million customers. During Sarah's tenure at Betterment, the company has doubled its assets under management and grown the business beyond the direct-to-retail routes that the firm started with, and it now offers a modern 401k plan to small and medium-sized businesses, an all-in-one custodial solution to registered investment advisors, and in fact, 3 distinct business lines: investment, savings, and retirement. Betterment distinguishes itself through a combination of scalable technology and service excellence. Sarah is an experienced and dynamic operating leader and has a super interesting career to date, including crossing over from the media sector. She has a passion for brands and consumer experience and has been featured on Bloomberg's Masterclass series on CNBC and now on the London Fintech podcast. So welcome, Sarah.
Thank you so much, Tony, for having me.
From what I can see, 50 to 60,000 wealth firms globally of all sizes, lots of consolidation going on in the sector, lots of potential for technology-led differentiation. And it's a really broad market. On one end, we have pure advisory, and we have self-directed investing. We have the robo-advisory and the automation side of it. And then we also have a whole plethora of new asset classes. We have new client segments, the next generation of investors. And so the sector is really looking for opportunities to leverage these new dynamics and deal with the modernization of the industry as it goes forward. So as we will see, I think through this conversation, Betterment is one of the most progressive next generation wealth management companies. And today's episode is wealth management for the zillennial generation, which is a great phrase. And I have to give credit for that one to Sarah. There's lots to talk about, so let's get on with the show.
Sounds good.
The Betterment founder, John Stein, I gather, described you as someone with a big company pedigree who is remarkably down to earth and scrappy. You've launched and grown businesses, bought and sold businesses, managed the bottom line, and driven consumer brands to win. And that's a great description. Perhaps you can tell us a little bit about early career and maybe where some of that's coming from.
Absolutely. So that's a very flattering description. So I can thank John for that. So I spent the first 25 years of my career in the media business. I started my career at Disney doing corporate strategy. And then I spent more than 2 decades at Viacom, mostly as the chief operating officer at Nickelodeon, and then later as the chief operating officer of the Viacom Media Networks, which is a range of brands, including Comedy Central, BET, MTV, Nickelodeon, and a handful of others. And I think during that time, it's fair to say that, I ran large operations, but I really did love the earlier years. I think of my 2 decades there in kind of 2 chapters. The first chapter was really the growth years, and it was a ton of fun, and cable was growing 30% a year, and you were sort of riding the wave of that growth. And then we built a whole host of businesses off of the back of children's IP at Nickelodeon. And then the back decade was more transformational years when we saw, the rise of the internet, the rise of the streamers, and really came under, enormous challenges and had to think about how do you transform the businesses for a digital age. And so when I found Betterment, I was excited to return to my growth roots and to be on sort of what I'll call the right side of the digital transformation as opposed to the tougher side of the digital transformation.
And with this sort of convergence of the media sector characteristics with this next generation of investors and everyone who wants to be online and the always on digital requirements of the new consumer base, I can see a really powerful crossover from what you were doing. What are the things that you think you've really brought from the media experience that are now playing into wealth management for the Zillennial generation?
Well, I think that, if we just start with building great consumer brands are about solving a problem for your customer segment and being laser focused on that customer segment. And so one of the things that distinguished us in my years of Viacom is that we had all of these targeted brands for specific demographics. And we really researched and got to know those demographics and then translated that information into, not into wealth management services, but into entertainment, right? But some of those principles are really the same, which is how do you build a great brand? How do you scale a great business? How do you build a team that is multidisciplinary and collaborative? All of those ideas are really, are transferable across businesses. That is not to say I didn't have a ton to learn when I got here. And as you opened, even just your opening about the wealth management space, it is incredibly complex and dynamic. And I think one of the most exciting things about being at Betterment is that we seek to simplify that complexity. And that's a really, being on message and sort of, simplifying the complex. Money is complicated for people, and particularly for people who are first time investors. And so how do we make that approachable and bring advice to a broader group of people is an exciting challenge that really is not meaningfully different from building brands that connect in any other customer segment.
Yeah, I think that's so important, that connection with the next generation of consumer. And I've seen research actually a few years back on the gap, the misalignment between traditional demographic profiling in the wealth sector and actually the passions and ambitions and purpose of the next generation, and how firms are just starting to line up with that much more sort of lifestyle aligned and personal set of priorities that the client base have.
Yeah. Well, I think that's right. I mean, I think this is all technology driven, right? And when you think about this next generation and how they differ, there are a lot of fundamentals in wealth management that don't change, which is you want to be better off a decade from now than you are today, right? The power of compounding is very important. Diversification in a portfolio. You want to pay lower taxes if you can achieve that. You want to pay lower fees if you can achieve that. These are sort of universal ideas that span generations. But you then add for this generation a need for technology that just was not the same for the prior generations, right? And an expectation, right? They live their lives, whether it's e-commerce or streaming, right? They live their lives on their mobile devices and they expect instant access and they expect intuitive user experiences. And that needs to translate to wealth management just as it does every other product category in their lives. And that is really, that is the key differentiator relative to the prior generation who didn't grow up in the same way with a smartphone in their hand.
So that's really interesting about the priorities and the new client and consumer base that you're facing off to. What about the sector as a whole, wealth management sector as a whole, which is, I said in my intro, long established, very diverse. Where do you think the sector's going?
I mean, that's a fairly broad question, particularly because we play in sort of three subsectors. But I think, there are some themes we could talk about, right? One theme is personalization, right? In the 2020, sort of 2021 era, there was an enormous rise in self-directed investing. I think some of that was born of the pandemic, right? Was people were bored and they needed an activity. And there were a lot of losers in that who lived through that experience. And what I mean by that is not everyone understands how to beat the market and can beat the market. There's asymmetrical information, and the average investor really shouldn't be playing with money in that way. And so I think in that moment in time, we were really selling eat your vegetables while some of the others were offering candy. And I think that was a challenging moment for us to sort of stick to our knitting and stick to what we believed to be the tried and true principles of long-term sustainable investing. And but I think that the pendulum has swung back, and now you have what really happened is you had young investors get a taste of investing. Maybe they did well, maybe they didn't do well, but they realized that it's incredibly time consuming to try to self-direct your investing in that way. And therefore they sought advice. and they've begun to seek advice. So I think the move kind of from play money to serious money with the zillennials is the phase we're in now. I do think, there have been some recent studies that have come out that have talked about the millennial generation in particular, and how wealth building in the last 4 years for that generation has been incredibly powerful, right? Many of them bought homes, took advantage of the low interest rate environment to buy homes, and those homes have appreciated. Many of them understood the power early of retirement investing. And there were some, particularly in the US, there were some regulatory tailwinds that continue that have really helped with that theme of retirement and encouraging retirement investing. So I think you're going to see powerful retirement story. I think you're going to see personalization, which is something that is enabled by technology, right? Which is sort of the ability to either tweak your portfolios at the margin for your values, or, taking it all the way to the other extreme to self-direct your investing choices. So I think those are just some of the things we see.
At the corporate level, those 50, 60,000 wealth firms, there is quite a lot of consolidation going on in the sector. How important do you think is enterprise size for wealth firms? Because there's every size and shape, and some of them are enormous.
So I think there's absolutely a minimum viable scale for sure. And I think we've, at 50 billion in AUM, I think we've kind of crossed that threshold, if you will, to build a sustainable business. I think trust and brand trust are incredibly important to investors. And so one of the things that scale begets scale, because you can build that trusted brand. We are seeing in the advisory space actually a shift away from wirehouses and advisors who sort of work for big enterprises to a more independent flavor. So the segment that we serve in the advisory space is the RIA, the independent investment advisor, and that has been the fastest growing segment in the advised space for the last, call it 5-6 years, and we expect that to continue. And that is really powered by advisors' desire to keep more of the economics of the business that they build, and they understand that they can do that, and they can be sort of sole proprietors or build small shops on top of emerging technology, and then have more flexibility in their lives. And so that's kind of, I think, a trend that we would expect to continue to see.
Yeah. So given those dynamics and Betterment's positioning, which seems to be very strong, what's the what's the mission? What's the vision for Betterment? What's really your North Star for the next few years?
So our mission is making people's lives better. And that is intentionally very aspirational and reflects the reality that money and life are totally intertwined. And so, we talk about making your dreams come true, no matter how small. And so that's really where we want to help. Is we started actually as a goal-based platform so that people could really set their own North Stars, right, with multiple time horizons, and put their money in buckets to reflect their own personal goals. I think we've evolved now to really understand that that is just a piece of the puzzle, and that really what we are seeking to do across all three of our customer segments is expand access to great advice. And so one of the observations that our founder made, that John made early on, and then that we've continued to cultivate, was this idea that great financial advice was really limited to the wealthy. And that, again, is a function of unsophisticated technology 10, 20 years ago, right, that couldn't help scale that practice. It was a one-to-one sort of human interaction. And that's true in retirement, right? So in the US in particular, if you work for a big company, you have a great retirement plan. If you worked for a little company, there are 5 or 6 million small businesses in this country that didn't have retirement solutions. And the government now is saying, well, that's not okay, because Social Security is not going to get the job done for this next generation. And so private saving needs to be encouraged, and needs to be encouraged early. So again, in the retirement space, this idea of expanding access beyond the enterprise worker, but to the small business worker. Same thing in retail, expanding advice beyond the high net worth individual or the wealthy individual to a sort of lower starting point, so that people can enter the wealth building game earlier in life. And then lastly, in the advisory practice, where again, I talked about the trends, same idea, which is a smaller and smaller investment advisor in terms of the total book and the total clients they serve, they can now leverage technology to scale a really nice business and a really nice practice. And so we're bringing access to that segment as well. So I would say ultimately it's access. And ultimately who we aspire to be is the Zillenial wealth brand. So if Schwab and Fidelity and Vanguard are my parents' brands, Betterment will be the Zillenial wealth brand.
Is zillennial a term that the sector is using, or is that is
I
that
don't know
more
that the sector is
your
using it. I did
yeah,
I did read it somewhere else, so I can't take credit for coining it, but
yeah.
I do think it's a really interesting idea that the generations are not so distinct, and so you see these 2 generations kind of coming together, and while they differ in their characteristics, there's no bright line in a product offering between one generation and another, and so I think what we see is that we're serving a customer who has 6 figures of investable assets, and that might be a millennial, and that might be a Gen Z customer, so
Yeah.
you kinda put them together.
Yeah. So you're democratizing access to great advice through a technology-enabled uh, wealth platform. It's quite a nice segue to perhaps talk a little bit more about how you're doing that. You talked about the 3 product lines, and perhaps you can, for the audience, unpack that a bit on how you're delivering that access and that service to your consumer base.
So, let's start with our retail business, which actually is pretty analogous to our advisor business. So, we offer retirement solutions, we offer investment accounts, and we offer cash. So, all 3 of those, products are interoperable, and we offer those both via an advisor or direct to consumer. The retirement piece, which includes, a whole host of vehicles, different types of IRAs, and are all really government enabled in terms of the tax
Yeah.
laws. Our company is very U.S. centric right now, and we can get to that because I know there's more of a global audience here. But much of what we do is around optimizing the U.S. tax code, and that is actually a real point of differentiation for us as a platform. When you think about retirement, that really bleeds into all 3 businesses, right? Because you have advisors advising on retirement, you have customers opening their own retirement accounts, and then you have retirement solutions for small businesses, which is in the form of a 401k that can live alongside those personal investment vehicles.
And the advisor part of it, access to advisor, that's, you're doing that, online? Is that talk to a, investment advisor real time? I mean, how much of this is, sort of, via chat or on the phone or,
Yeah, there's a
other channels?
continuum. It's a good question. We have a continuum actually. So, our sort of most common entry point is a digital only solution. We often
Yeah.
find that when customers face life events, so they want to buy a home, they want to merge their finances with a partner, they're
Mm,
having a child or thinking about having a child. Those are all moments when people seek human advice. And whereas some of our competitors have taken the point of view that everything can be done digitally, we actually don't believe that because we know how emotional money is. And a lot of people want to talk to an advisor for peace of mind, right? Even if the tools are as clear as can be, if this isn't your comfort zone, you may just want some personal guidance beyond what the app or the website is telling you. And so, respecting that fact, we have a ton of human activity sort of behind the scenes, building
mm.
portfolios and customer service and all of that. But we have a continuum in terms of the offerings we have, which is you can enter in digital. You can then, for a slightly higher price point, have a relationship with an advisor, and that's typically done on Zoom. I mean, they'll do it on email and phone and chat as well, but that's typically
Yeah.
done on Zoom. And then, um, if you want to graduate from that, we have a whole host of advisors on our platform in our advisor business where we can begin to match you with the right advisor for your needs.
Very good. And you mentioned portfolios. I wanted to touch on that. So we talked about the client segments and the advisory journey in terms of the products, and that you're doing that through portfolios. And I believe you've constructed some with other very large names in the sector. What's your strategy on the portfolio side?
So, our strategy is both a homegrown strategy and a third party partnership strategy. So, again, we start really with the consumer and what do they need? And what we don't want to do, before I get to what we do want to do, What we don't want to do is have so much choice that it overwhelms the customer. Because again,
Yeah.
simplicity and ease of use is one of the things that we really pride ourselves on, and then we work incredibly hard to deliver for the customer. So what we've done is we've said, what are the types of portfolios that we think are best for our consumers? And so we knew we wanted to add a cash product. We started with just diversified, essentially index portfolios. We then, and those are custom models that we built ourselves. We then, there were a lot of folks who wanted sustainable investing as really a theme, whether that's climate or whether that's social diversity. And so we built portfolios to satisfy that need that again are homegrown models developed and managed within Betterment. But again, stick to the principle of diversification and largely are index funds, but they just tilt one way or the other to reflect those values for customers. From there, we, in this interest rate environment, one of the questions is, a lot of our customers are putting a lot of money in cash because the yields are great. And so the question is, what are they going to do as rates start to come down? And we knew that we wanted some yield products that were not as safe as cash, but not as risky as stocks and bonds. And so what we did is we went out to talk to some of the greats and we developed great portfolios with BlackRock and Goldman Sachs and brought those onto our platform. And yes, they are big names and they manage those portfolios and then we update them and then we apply a technology layer of advice over them because certain portfolios are better for certain customers, depending on, for example, their tax bracket than for other customers. So we use our technology to then steer and advise the customer looking for yield into a different set of choices depending on their time horizon and their risk tolerance.
Yeah. And it strikes me as a brilliant strategy for the brand as well. You talked about trust, and not that Betterment won't have earned and built that over the years, but then you tie up with the biggest names in the industry. It can't hurt the overall positioning in the market and the sort of perception of stability that the client base are going to have.
Absolutely. And look, I think, people ask us, are you a technology company or are you a wealth management company? And
That was my next question.
oh, it was excellent. I think the answer is yes, right? Is both.
Yeah.
But if I were to, I think I would probably say we're 70% technology, it's not a perfect math, but 70 technology, 30% wealth management. And I say that because we have a real depth of expertise. But as you point out, we can't have the expertise and the track record and the teams that BlackRock and Goldman and some of these companies have. And so if
Yeah.
they're making great products and distributing them on third parties, there's no reason why, if that's the best product for our customers, there's no reason why we shouldn't offer those to our customers. And so as long as we're keeping costs low and doing the right diligence, we don't want to just be an open marketplace, right? We want a reason for each portfolio to exist on our platform so that it fills a real need for that customer. But absolutely, we want our customers to have the best of the best. And that's the job we're in. We're in the job of finding them the best possible products and giving them access to those.
Yes, you've really assembled the best components internally and externally to provide that wealth service. Let's talk a little bit about being a technology company, technology company that does wealth. We've met before. It was in your Manhattan offices, and I was struck by the fact that you had dozens of development teams building features for the platform, and it felt like a technology company. So, was that always the way from the outset, and how have you approached really differentiating through the tech?
So I would say absolutely yes. I think, Betterment was John founded the business with some very simple wealth principles, but sought to build a technology company. And his
Yeah,
belief was that technology could basically do it better, right? Could automate
yeah,
things that, and therefore bring down costs and could automate, tax rules in a way that would optimize for customers. And so I think from day one, the question was, how do we get costs out? Because when you think about investment returns, one thing that matters is what you're invested in. But the other thing that matters is how much tax are you paying and what kind of fees are you paying? Because those two components can wipe out your returns even in the smartest investments. And
yeah,
so what technology allows you to do is really optimize around those two things, fees and taxes, right? So traditionally, wealth management advisors charge 1%. And by the way, that's well worth it, right?
Mm.
That being said, if you don't need that level of service yet, because maybe you're below the threshold of assets that those advisors really service, you can have an earlier on ramp at 25 basis points, which is what we offer. And I think the
Mm.
early days, it's interesting because in the early days, advisors really didn't like us. And there was a lot of controversy, are they going to put us out of business because they're doing it at 25%, 20 cents on the dollar? And the answer was no. The answer now has proven to be no. We're not going to put them out of business. What we're going to do is we're going to open the eyes of consumers earlier in their wealth building journey to the value of advice. And then when they're ready for that human intervention, we can put them at the doorstep of the right advisor. And again, I think that's the beauty of expanding the market. And that's the beauty of what being a technology company, first and foremost, does.
And the platform has relationships with advisors who are a big part of the distribution.
And I think you asked differentiation. I mean, I think the simplicity and the elegance of the user experience is really that is the most important thing we can provide in the technology. We also have built a completely vertically integrated technology stack, which allows us both to release features quickly and to do things at lower costs. And I think that's part of like what the scale gets you is scale based in technology gets you an ability again to keep pushing costs lower and to get product releases out the door faster and faster. And sort of those are probably the two things that we're always working to improve.
And at the same time, you're providing an always-on digital service, super slick client experience, and these things that are so important. I mean, how do you think Betterment differentiates compares to the competition? So there are other players trying to do similar things, like Wealthfront, Fidelity, maybe Schwab. I don't really know where you'd rank yourself, but love to hear.
So I don't want to rank myself I mean, I would rank us at number one
Of
always, right?
course.
But I think that it's important to step back and think about the different strategies of the different businesses rather than sort of the rank of the businesses. And I say that because we are unique in the challenger landscape in that we serve these three demographics, right? We serve the retail customer, the small business, and the registered investment advisor. So our thesis was build a single tech stack and serve three different customer segments that have a lot of overlapping properties, right? So when you think about Fidelity and how they built their business, right? They had 401k plans at big enterprises, and then those customers maybe had their first introduction to Fidelity via their workplace savings. And then Fidelity would call them and say, well, now that you're saving via your workplace, would you like to open an IRA? Would you like to open a taxable savings account and build wealth in other ways? So the connectivity across the businesses is real and is palpable. So what we're doing looks a lot like the large incumbents, Schwab, Fidelity, Vanguard, in that we're serving these three customer segments. When I think about the other wealth brands that we're competing with in the digital space, we have actually different competitors in each of our three subsegments.
Mm.
And so I do think that if most challengers basically pick a customer, start with a product, and then try to sell sort of more and more products to that same customer, we turned the model on its head in search of diversification because we think that ultimately that diversified revenue base is really what will make us durable and long lasting.
I love that. I mean, is anyone really sort of doing the same as you, or are you really
Only
almost
the
in a
big
category of your own?
only the big incumbents, no one
Yeah,
else,
yeah.
in the challenger space, and I think, look, in the short term, I'm not gonna say that's not a challenge, right? You're working with comparable resources to some of the competitors, and we're trying to achieve 3 things, and many of them are trying to achieve 1, so there are times when, sure, it can be frustrating, we can go slower in one particular vector than a competitor, but I think when you take the long view and you say, like, where are you gonna be 5 years from now, a decade from now, 2 decades from now, I think it is the winning combination, and therefore it's worth a little bit of, momentary frustration when maybe you don't get a feature out quite as quickly as a competitor.
And we touched a little bit on the team. So just want to talk about the team for a minute. You've grown quite fast. You've been scaling through the pandemic. You've got a mix of disciplines in the team because clearly you've got a strong engineering focus, but also the industry and the wealth expertise. So how have you approached building your team?
Well, the good news when I got here in 2020, there was a really strong foundation, and a fantastic culture. So I
Mm.
think, culture is everything to me. And I really believe that, the best thing I could have done is come in and not screw it up, right? Because it was incredibly strong and it was strong through the pandemic. Like when everyone had to go home and
Yeah.
work from home, they figured it out and they stuck with us. And people really believe and love the mission and the brand and our reason for being. So that was sort of foundational when I got here. I would say 60 or 70% of my senior team was here before I got here and remains here. And we got a bunch of folks on my senior team who've been here a decade, which is really
Yeah.
awesome. And then there were a couple of empty seats on the executive team. There wasn't a head of marketing, for example, when I got here. So I was able to bring someone from my past. I brought in a chief of staff who I knew and I respected from my past. So it's a nice combination of both people who have been here a long time and newer faces. But we've grown, deliberately. I think building organizations and building operations to support those organizations is one of the things that I grew up doing as a chief operating officer for much of my, prior career, prior to arriving here at Betterment. So I think you're only as good as your people at the end of the day.
Yeah.
And I think we have the best people. I think we have the best culture. Um, we spend a lot of time together, which I think is an important part of that. And I'm sure you'll ask me about, in office and hybrid and all that, because that feels like, a flavor of question that people always want to talk about.
Yeah. Well, it's a very open culture. I know because I have sat with you in the New York office and for anyone who's been to the Betterment office, a big open plan dining and working space, and very few barriers. The team are out there having lunch, and we're having a conversation, and your team is sitting next to you. Oh, it's a seat free, and that sort of thing. And it's like just felt very open. And I'm sure that's part of the culture that you're building. I think you were still at that point in time, the industry was still adjusting post pandemic and in office versus remote. So yes, would love to ask that question. How have you made that balance for Betterment?
So food is the thing that unites us, I would
There we
say.
go.
Like
Food.
we put a lot of emphasis on the food. So we have wonderful cooked lunches 3 days a week. We have folks are required to be in the office Tuesday, Wednesday, Thursday,
Yeah.
and more flexible on Mondays and Fridays. We've also done something sort of unique with our summers where we, from July 4th to Labor Day, we give people more flexibility on where they want to be. And that really is in respect of folks who have younger kids and are raising kids. And when those kids are out of school, it can be harder to kind of organize the same kind of work-life balance. So I think it's a nice mix. It gives people a break in the summer, but then it brings us
Yeah.
all back together, raring to go in September. I feel pretty strongly that culture is built being together. And so
Yeah.
sure, we have you know, 35-ish% of the team is actually remote. Some of that is customer facing jobs that are totally fine to be remote because they're not spending days on on the Zoom. They're more spending time with customers. But for the folks who don't live in New York, we try to create a lot of opportunity for them to come visit, like multiple times a year, on sites, togetherness. Again, building to me, it's about building relationships. And there's nothing like train. You can't train people on Zoom. You just can't.
Yeah.
I mean, I don't believe you can. So
And we'll say there's no such thing as a free lunch, but is there a free lunch at the
there
Betterment office?
is a free lunch. There is such thing as a free lunch. That's exactly right. No,
There
look,
you go.
I think I'm comfortable with sort of who we are, which is, requiring 3 days a week. Sure, there are still people out there who want more flexibility. And I would just say, then Betterment's not the place for you. That's okay.
Yeah.
Like you can
Yeah.
find that somewhere else. But we're a place that really, works well together and in a team in the office.
It feels like you've struck a very good balance. There are some of the big institutions who now need people back at their desk 5 days a week, and I think the new normal balance is pretty much what you described, and it's clearly
Yeah.
working.
I don't think 5 days a week
Mm.
is ever coming back. I was surprised if firms, more and more firms move 4 days a week, because I just think it's pragmatic. People get distracted when they're at home, um, but I think for now we've struck a really nice balance, and we're happy with
Yeah.
where we are.
So we've touched on the technology advantage. So what about AI? I mean, it's in every conversation I have on this show. There's lots going on in the wealth sector, of course. And can we use AI to provide an automated advisory journey, for example, or automate customer operations or portfolio selections and very many other things that you could point language models and automation at. Where are you with Betterment's AI usage, and what are the plans?
Yeah. So, I mean, I think we have to be using AI in every business, and we would be foolish not to be learning, as this new technology develops. I sort of think about it like the digital transformation. I remember like right around, this will date me, but I remember like right around 2000, and people would say, "Are you going to work for a digital company?" And the answer was like, "Well, every company is going to be digital." Like the idea that there was a
Yeah.
distinction between a digital company and a non-digital company at that time. And now every company has digital as part of their offering, right? It's part of their distribution or it's part of their back office or whatever. So I think AI will be the same, which is to say there will be AI utilized in so many different ways, many of which we can't predict. So what we've been doing is really putting governance principles in place and then experimenting as our vendors mostly develop AI layers to their technologies. And so I would say the place we're furthest along is in customer service, where we started with a scripted chat bot, which wasn't generative AI, but was sort of pre-generative AI,
Mm.
scalability through technology, right? Or through, and so we did a scripted bot, which we are now evolving into a generative AI bot, which basically means that more surface area can be covered by the customer service bot as it can learn. Um, we are also using AI demonstrably in lots of operational areas. So
Weird.
think about first drafts of marketing, think about plan design review in the 401k. Basically, anything time consuming that involves, for humans, that involves ingesting a lot of information can
Yeah.
be accelerated and the cost can be lowered with AI. And so we're deploying it really throughout the business. And I think mostly in efficiency ways. Where we're not yet ready to deploy it, I think is the question on everyone's mind is sort of, can AI offer financial advice? And that's where we draw the line at the moment. First of all, we're an incredibly regulated industry and we're a fiduciary. Trust is of the utmost importance. So we're using AI, let's say, to do the prep materials before the call, but then the CFP reviews the materials and has the call. So the last mile, so to speak, is still done in the traditional way, but you can speed up a ton of your prep,
Yeah.
using the tools that are now available.
AI advisory is not that far off, and I think you're absolutely spot on. So you can get 80% of the way there. There are there are wealth advisory bots on the Chat GPT store that will take you a long way along that journey, and they are looking up current data and they're using that to provide recommendations. But you can't go the whole way. You've got to have human in the loop.
The
Uh,
idea of hallucination is still real.
yeah,
And so I think, we just have to be cautious and take steps. And as long as you have the right controls in place and the right humans reviewing it, I think humans can be supercharged by AI, but not
yeah,
replaced.
yeah. I would agree. So I know you've only been at Betterment for a short time. The business has come quite a long way. What are some of the challenges and lessons you've learnt along the way?
Oh, I mean, there's so many lessons. That's a tough sort of broad question.
It's a very open question, I
It's a
know.
very open question.
What
So
pops in top of mind?
So, look, I've had to learn all about the industry. So for me, it's
Yeah,
it's almost an unfair question, right? Because first and foremost, I came with a fresh set of eyes, and sure, I can build a
yeah,
brand, but I didn't know a whole lot about wealth management. I've chosen to get into the product more so than the engineering of the product, right? I am not an engineer by training. More than half of my team is engineers, and so I
yeah,
need to know sort of enough to be dangerous and ask good questions and get them the support they need, but not enough to meddle. So I don't know if it's a good thing or a bad thing that I'm not an engineer by training, but you could ask the team that question at some point. Every day is learning for me, right? So whether it's industry learning, whether it's the dynamics of being a CEO, whether it's how to spend my time between thinking about strategy and working with the investors and, being current on, what's going on in the competitive landscape versus really digging into the operations and with the team. I think there's just so much as a CEO to learn. And probably the biggest question is, am I spending my time as effectively as I possibly can to maximize our business outcomes? Right. And the answer probably is no. Right. you can never be perfectly effective,
It's a continual balance.
but it's a
So,
balance. Yeah.
yeah. But with the benefit of all of that experience and hindsight, might be interesting for the audience. What advice might you give to aspiring fintech entrepreneurs who want to build the next Betterment, or to institutional folks who are looking over the fence and saying, I want to make a switch of either industry or stepping out of corporate into the fintech side of the industry?
So I think the first thing I would say is really know your customer and always put the customer's needs and listen to your customer at the center of everything you do. I think the biggest pitfalls are what I would call me search, right? Would be when you know, when you talk to the employees and what they want and let that shape your roadmap. I think you really have to constantly get back to the customer. I would also say focus is really, really important. And I don't always think we have the perfect focus here, but I think it's really important that you're only as strong as your weakest link in terms of product. And so don't release more products than you can support too quickly, right? Finish the job and get to excellent in everything you do. And I think people talk about speed, and I worry that like speed can be a distraction, right? I think excellence is more important than speed.
Mm.
So those
Yeah,
would be two thoughts I have.
yeah, that's a really good one. It is very easy to get distracted. There's And I think so stats that I've seen say that there's 26,000 fintechs out there and 70,000 AI firms, and we talked about how many wealth firms there are. There's always the next shiny thing, and um, building a business is 1% inspiration and 99% perspiration. And if you don't sort of stick to the script, then you just end up going off down rabbit holes. And we have this in our business all the time. There's lots of things, potential partnerships, or hey, we could do this, we could do that. And well, I think on self-reflection, we've been reasonably good at sticking to the script. Well, it's certainly super tempting to just go chasing after the next apparently low-hanging
It's
opportunity.
it's super tempting, and I think, we've done it. If I look back, hindsight is 2020, but we launched some new businesses too soon.
Yeah.
Like before we were really ready to commit to them, and that means some of them have taken longer than they should have. And I'm trying really hard to be disciplined now in this next chapter.
Yeah. Okay, so let's sort of future forward for a bit as we move towards wrapping up. Future plans. So Betterment has clearly been super successful in the US, and I think there's a lot more runway there. And you've had product evolution and broadened business, and you're scaling at pace. Do you see opportunities further afield, other locations, other regions?
So I think to the focus point right now, because we have these three distinct customer segments, I like to think of our company really as we have one mature business, fully developed business. I mean, you're never fully mature, but at scale,
Yeah,
and we sort of know who we're going to be when we grow up. And then we have two that we think of more like Series C, Series B companies embedded within a Series F company is how we like to talk about them. And
yeah,
so I really think we need to prove the thesis. Our next, call it 3 to 5 years of growth, will be powered by our B2B lines that have real product market fit, but that don't yet have the scale of the retail business. And so to me, focusing there, because there are two of them, that feels like enough work for us, that
yeah,
I think international is not on the immediate roadmap.
yeah. So sticking to the script for now. But in
We're,
terms of evolving the service, anything interesting, exciting ahead?
um, we're
That you're
going
allowed to talk
to
about?
Yeah, I mean, generally they don't let me talk about it, but we're going to bring donor advised funds to the platform soon, which is
Okay.
allowing folks to donate appreciated shares to charities, which particularly on the higher end of our both our advisory business and our retail business, folks have been asking for that. So we think that's going to be, a nice feature. We just recently launched that the Goldman Sachs product you talked about is,
Mm.
just a handful of weeks ago. And that's a really fantastic product as interest rates start to come down that we're incredibly excited about, because it's a very tax aware product, particularly suited for people in higher tax brackets. So that's exciting. Those are a couple of the little teasers, I would say.
A lot of things to look forward to.
Yeah.
So thank you. I mean, I feel like we covered quite a lot in terms of what Betterment's already achieved and what lies ahead, and lots of insights in there for both folks that are in the sector and those who are perhaps thinking about it. So thank you for sharing your journey and your thoughts with us. And if folks want to find out more about you, Sarah, or about Betterment, wherever they go,
You can either download us in the app stores, the Betterment app, or go to betterment.com.
very good. Thank you very much.
Thanks, Tony.